Hi, I'm Gwen Preston of Resource Maven, here for another Beneath the Surface segment, and I just wanted to chat a little bit about what's been going on in the markets these days. Basically, these odd days bouncing along at the bottom of the metals market continue, and it is pretty odd out there. I mean, metals investors have been facing headwinds for years now, so we know what that's all about. But now what we're starting to see is the broader markets are also starting to feel some pushback, so they're also joining us in this confusion. What does that look like? Well, US data is definitely showing some weakness. The jobs market, for example, is really starting to feel the impact of lower oil prices. In the state of Texas alone, more than 25,000 jobs were lost last month, mostly related to the price of oil. Retail and housing data also doesn't look that great. So that's the economy side, some of it. On the market side, things also aren't looking that good. Basically, as Q1 results roll in, one of the most important indicators that everyone looks at, which is earnings per share, are coming in at their lowest levels in years. As a result of that, congruent with that, US markets have essentially stalled out. They've traded sideways for about the last 6 weeks, and so has the US dollar. Now, those are very significant stalls in that the US markets have been climbing for years. The US dollar has been climbing very strongly for a year. So for them to have stalled out is really significant. Now, for gold to really get a boost, what we need is for the US markets and the US dollar to turn down, but stalling is the first step because macro forces change very slowly. Meanwhile, when we're talking about gold, the currency wars, the global currency wars that are the other major factor in the gold market, continue. So the central banks of Russia, China, and India are buying piles of gold. We get data about that pretty regularly. China does something to rejig an aspect of its markets or of its banking system or of its loan system almost every day, and that sends jitters through the global markets. And then there's also a whole bunch of machinations going on, strengthening economic ties in the East that exclude the United States. And those just continue to build and build. And that is slowly eroding the dominance of the US dollar. Again, these are macro forces that change very slowly. They are changing, though, in manners that are good for gold. The problem for gold is that in the United States, there is a huge group that spans government, investors, and corporations who all share a vested interest in continued strength in the US markets and continued strength in the US dollar. So that really pushes back against this macro shift that's happening in favor of gold. In short, it's a slow process, but I do believe that things are moving in favor of gold in the long term. For now, what we end up with is a range-bound situation. Gold has basically bounced along between about $11.90 per ounce and $12.10, $12.20 per ounce for the last month, and I see that essentially continuing until some big event happens that bounces the markets into a different direction. What about some of the other metals? Copper has remained near the 5-year low that it touched in January. No real reason to see a major change in that in the short term. Zinc's looking a bit better. Zinc inventories are very low right now, and that has helped zinc prices increase 10% in the last month, so that's looking good for some of our zinc equities. But I would say the two hottest markets, or two hottest commodities out there, are two of the smallest markets, and that happens to be diamonds and uranium. So a couple of diamond explorers are actually part of this select group of equities that of resource equities that have outperformed the market lately, some quite notably. And that's basically just based on the fact that the outlook for diamond pricing is pretty good, and there aren't a lot of options out there when you're looking for a diamond explorer or even a diamond producer to bet on. So diamonds are an interesting market. The other really interesting market is uranium. And really what's happening there is that an answer might finally be around the corner to the many long-term calls for a demand-driven uranium price increase. Remember, it was the Fukushima crisis back in 2011 that really derailed the uranium market. And now we're finally getting to a point where restarts, nuclear reactor restarts following that crisis are about to happen. Just this morning, a court decision came down that approved the first 2 reactors, Sendai 1 and 2, for restart, and that overturned an injunction from a month ago that had blocked that process. Why does this matter, 2 reactors in Japan restarting? It matters for 2 reasons. It matters because of psychology, and it matters because of a perceived overhang of uranium supplies in Japan. So restarting the reactors on the psychology side will, first of all, really show that societies, Japan, can overcome a disaster like Fukushima and return to nuclear power in spite of such a disaster. It takes a long time. It's been a really long process to get these 2 reactors restarted, but it can happen. Subsequent reactor restarts should be quite a bit faster because these first 2 were sort of charting the path, and now the rest can follow along that course. So that'll be good. And once those reactors get going, they'll start eating into this overhang of supply that's sitting in Japan, and that will really help the uranium market ease its concerns about what Japan is going to do with that pile of uranium fuel that it's got sitting there. So those things really bode well for uranium. Basically, these Japanese restarts will provide a much needed psychological catalyst for the uranium price and for uranium equities. I would say many analysts expect uranium prices to double in the next 6 to 12 months, and I'm on board with that. So that's interesting. So in general, explorers keep plugging away, raising money and advancing projects where and how they can. The whole situation is a slog, but there is a rebound coming, as we all talk about all the time. And those that have maintained some momentum will be the first to respond to that rebound. Now, that is why I'm joining forces with 3 other experienced newsletter writers to bring you a new investing event that you don't want to miss. So if you are someone who appreciates metals and market analysis from resource experts, if you follow investment recommendations from professionals like myself who are focused on finding the best resource stocks out there, if you're unaware of what to do with your metals portfolio after 4 bare years, it's been a difficult slog, then the Metals Investor Forum is designed for you. So this is a small conference. It's happening in Vancouver on May 30th, and it's hosted by myself, Eric Coffin of the Hard Rock Analyst, Brian Lundeen of the Gold Newsletter, and John Kaiser of Kaiser Research Online. So together the 4 of us offer decades of resource investing experience, and we're bringing our expertise and our favorite top pick companies together for this event. This select group of our favorite companies will present their stories. Each of us newsletter writers will also speak, talking about our opinions on the current situation and how to profit moving forward. So attendees will learn a lot from those formal parts of the day, but just as importantly, there'll be 2 full hours of catered coffee and lunch breaks that will give you valuable opportunity to have one-on-one time with the management from the companies and from the newsletter writers. Having confidence in the people who are managing your investment dollars is absolutely essential, and it can be difficult to find that, but the forum is offering precisely that opportunity, the opportunity to sit down with these CEOs and really get to know who they are and what they're doing. So information from experts, presentations from high potential resource companies, the opportunity to have one-on-one time with management team and with newsletter writers. This is what we're offering at the Metals Investor Forum. And best of all, it's free to attend. So to reserve your spot, head to my website, www.resourcemaven.ca, and click on the Metals Investor Forum link, and your ticket will be sent right to your inbox. Thanks. I hope you enjoyed this conversation, and I hope to see you on May 30th.